What happens when India's largest IT services company posts solid margins but muted growth? That too in a quarter filled with macro stress, cautious clients, and a tech pivot that's just beginning. Welcome to Alpha Call. I'm Radhakrishnan Chornat from Alpha Street, and in today's episode, we are decoding the Q1 FY26 results of Tata Consultancy Services, better known as TCS. It's a company that rarely surprises, yet its quarterly moves often signal where global IT demand is heading. Let's get into what stood out this time, not just the numbers, but how they are navigating client hesitation, AI led transformation, and a changing services landscape. First, let's take a quick company snapshot. Now, TCS needs little introduction. With over 6 lakh employees, presence in 55 countries, and deep domain experience across BFSI, manufacturing, life sciences, and more, it's the bellwether of India's tech services industry. But while its core remains resilient, TCS is under transformation. The CEO noted demand contraction, but also robust deal closures and growth in AI led services. This isn't the hyper growth era of tech outsourcing, it's the era of optimization, AI replatforming, and vendor consolidation. Ladies and gentlemen, the pivot is real. TCS is now investing across the AI stack from infra and data platforms to agentic AI and business apps. The launch of Sovereign Secure Cloud, DigiBolt, and a revamped cyber defense suite signals a multi layered strategy to stay relevant in enterprise IT. And this shift isn't coming out of nowhere. Over the last 4 quarters, TCS has steadily messaged its evolving focus. In Q3 FY25, emphasized cloud first transformation. And in Q4, they highlighted AI consulting. This quarter, it's all about scaled deployments and client integrations. Now to the numbers. TCS reported revenue of 63,437 crores this quarter, which is a modest 1.3% year on year growth in rupee terms, but a 3.1% decline in constant currency. Net profit was 12,760 crore. That's up 6% year over year, and operating margin came in at 24.5%, expanding 30 basis points sequentially. Net margin improved to 20.1%. So margins are stable, even strong, but top line growth is clearly under pressure, particularly in key verticals. Life sciences and healthcare saw a 9.6% CC decline, while communication and media and India business both fell sharply. Headcount stayed steady at 6.13 lakh. Attrition continues to trend down, now at 13.8% compared to over 15% a year ago. Cash flow from operations was 12,804 crore, over 100% of net profit, and an 11 rupee share per dividend was announced. Looking back, Q1 FY25 saw stronger CC growth of 4.4% and higher net additions. This quarter signals a softer trend line. Not a crisis, but a slowdown that bears watching. Let's talk about what's behind the 9.4 billion in total contract value booked this quarter. North America contributed 4.4 billion, BFSI alone stood at 2.5 billion, and consumer business at 1.6 billion. But beyond the numbers, the Q&A revealed critical themes. Clients are shifting from experimenting with AI to production grade rollouts. Management emphasized growth in pipeline conversion, with deal velocity picking up in data engineering and digital core modernization. BFSI remains soft, but demand is stable in cards, payments, and compliance work streams. Insurers are looking to optimize cost structures. There's one insightful comment that I noticed. Pricing has held steady even in renewals. TCS isn't seeing deep discounting despite client budget caution. Cloud, cybersecurity, and SDLC automation are the strongest solution areas this quarter. Themes repeated over the last 3 earnings calls. Notable deals included large transformations in telecom, banking, and pharma. For example, a global life sciences company expanded its S4 HANA transformation with TCS across 80 countries. Virgin Atlantic renewed for cloud first modernization, and ICICI Securities signed on to deploy the TCS Banks platform for next gen trading. Also worth noting, the company mentioned no significant furlough impact in Q1, unlike Q3 FY25, where seasonality had dragged volume. So, what are the risks? Revenue growth is uneven. North America and continental Europe are flat to declining. The Indian business shrank over 21%, one of the steepest falls in recent memory. Margins are holding up, but AI investments will rise. Wage inflation and on site mix may exert pressure, but TCS managed to sustain margins over the last 4 quarters, hovering between 20 25%. But any dip in utilization or pricing discipline could dent that. Client budgets are clearly still tight. Q4 FY25 and Q2 before that showed better growth. This quarter tempers that trend. The company's bet on AI led transformation, while promising, will need to show scale revenue impact in the next few quarters. Deal wins are robust, but execution and conversion timelines matter more now. To conclude this alpha call, TCS continues to deliver, but this is no longer the story of year on year acceleration. It's a story of repositioning from growth to resilience, from services to solutions, and from traditional IT to enterprise IT. What makes Alpha Call unique is not just the headline numbers, but distilling the nuances buried in transcripts and investor calls. And the Q&A section, that's often where the real signals lies. And our goal at Alpha Street is to bring those signals to the forefront. We are building the world's first ecosystem connecting public companies, investors, analysts, and expert networks to generate decision grade AI powered insight. This series is a small but strategic step in that direction. I'm Radhakrishnan Shonad. Thanks for tuning in, and don't forget to follow Alpha Call for more clear, candid decoding of India Inc.'s earnings season. This episode is for informational purposes only and does not constitute investment advice. Alpha Street is independent and not affiliated with or sponsored by the companies mentioned.